While millennials have seen huge wealth gains over the last 2 years, but they still aren't meeting the milestones of previous generations. Data from the Federal Reserve that shows that millennials' median net worth increased by 39% from 2019 to 2021, but it is still only $24,000, which is far below what baby boomers and Gen X had at the same age. The data also points out that millennials face many challenges that hinder their financial progress, such as rising costs of living, student loan debt, stagnant wages, lack of affordable housing, and the effects of the pandemic. Millennials need to take advantage of opportunities to boost their income and savings, such as investing in the stock market, starting a side hustle, refinancing their loans, and seeking financial education. Millennials have a lot of potential to achieve financial success if they can overcome their obstacles and leverage their strengths. Millennials are now expressing their frustration and anger towards baby boomers who they perceive as having benefited from a more prosperous economy and a more stable society while leaving behind a mess for the younger generations. This generational conflict reflects deeper issues such as inequality, climate change, and political polarization. Millennials are facing a bleak economic future due to structural changes in the economy that have eroded their opportunities and security. Millennials have lower incomes, higher debts, less assets, less mobility, and less social support than previous generations. There's some common myths and stereotypes about millennials, such as being lazy, entitled, or spoiled. None of this is true, and millennials have to spend unwanted energy fighting off these myths. They are facing various financial challenges that have affected their economic prospects and well-being. The following factors that have contributed to millennials' difficulties. The Great Recession of 2007 to 2009, which reduced their job opportunities, income growth, and wealth accumulation. The student loan debt crisis, which has burdened them with high levels of debt and interest payments that limit their spending and saving capacity. The rising costs of living, especially housing and health care, which have made it harder for them to afford basic necessities and achieve life milestones such as homeownership and marriage. The inflationary pressures, which have eroded their purchasing power and increased their cost of living. The unexpected expenses, such as medical bills or car repairs, which can derail their budget and savings plans. The lack of adequate retirement savings and social security benefits, which have raised their concerns about their future financial security. While millennials are buying homes at a fast rate compared to other generational groups, is that they accounted for 38% of home buyers in 2020, up from 32% in 2019. However, they also face challenges such as limited inventory, high prices, and bidding wars. The financial crisis intensified America's rising student loan debt burden. Is that the average student debt per borrower increased from $18,233 in 2008 to $37,693 in 2020. Moreover, about 1/3 of millennials have delayed major life events such as getting married or having children because of their student debt. Millennials lag their previous generations when it comes to income growth and their net take-home salary. Is that they earned an average annual income of $40,581 in 2013, which was 20% lower than what baby boomers earned at the same age. Furthermore, millennials paid an effective tax rate of 18%, which was higher than what baby boomers paid at 15.9%. Millennials are catching up in terms of generational wealth. Is that they increased their median net worth from $19,200 in 2016 to $51,400 in 2019. However, they still lagged behind other generations such as Gen X and baby boomers at the same age. Millennials were thrust into adulthood during the worst economic downturn since the Great Depression. Is that they faced a higher unemployment rate than other generations during the peak of the recession in October 2009. Additionally, they suffered a larger decline in earnings than other generations between 2005 and 2017. The COVID pandemic has been harder on millennials than on other generations. Is that they experienced a higher jobless rate than other generations during the peak of the pandemic in April 2020. Moreover, they lost more income than other generations between February and May 2020. Millennials can use to overcome their challenges and improve their financial situation by doing the following: investing in the stock market or other assets that can generate long-term returns. Starting a side hustle or a business that can increase their income and diversify their sources of revenue. Refinancing their student loans or applying for forgiveness programs that can lower their interest rates or reduce their debt balance. Seeking financial education or advice from experts or peers that can help them manage their money better and make informed decisions. Saving more for emergencies and retirement by taking advantage of employer-sponsored plans or individual retirement accounts. Millennials are the largest, most educated, and most diverse generation in U.S. history, but they also face significant financial challenges that have been exacerbated by two economic crises: the Great Recession and the COVID-19 pandemic. These crises have resulted in higher unemployment rates, lower income growth, higher student debt burdens, higher inflation rates, and lower homeownership rates for millennials compared to other generations at the same age. Moreover, millennials have different attitudes and preferences toward money and investing than previous generations, such as using digital banking platforms, investing in socially conscious companies, and delaying major life events. To overcome these challenges and achieve greater financial security, millennials need to improve their financial literacy, behavior, and wellness through various strategies such as investing in stocks or starting a side hustle.